Today, I want to share with you guys how much it cost us to move from Houston to Boston with our two cats. And I think it would be really fun to do it in a way that would give you a glimpse of how the case study method is used to teach accounting here at Harvard Business School. Accounting is taught in the first module of our financial reporting and controls class, and it serves as the foundation of our ability to understand the managerial judgment, the ethics, the evaluation of a company's financials, and how to build trust with those who will be reading the financials we will someday be in charge of. I've collected all my moving cost information and written a case and pre-built a template to save some time. I hope y'all enjoy. Alrighty, let's get started. So here's the case. And before we even begin reading the case, I think we should all read the assignment questions first. That way we can keep in mind what we should be looking for as we are reading the case. So the assignment questions are, should they get U-Haul insurance? Why or why not? Number two, by the end of the move, did the family receive the $1,000 bonus and how does that affect their balance sheet? So this means we're probably going to be making a balance sheet and we have to account for that $1,000 somehow. And a bonus question, what do you think the moving alternatives were to shipping their belongings and flying? So now we know they shipped their stuff and flew. Did they choose the most economical route? So was it the cheapest, or did it have the greatest value? And what will you have chosen instead, and what are the trade-offs? So we're trying to think of what the value proposition is here and what the trade-offs are. And since we know that there's going to be a balance sheet, we should take a look at that first so we can kind of see what the categories are that we might need to look out for. So here's the balance sheet. We can see that we have the assets up here, and those equal the liabilities plus equity. And here we also have a couple columns for the income statement. So here we're looking at budget, booked flights, reserved U-Haul, U-boxes, packaging materials, blah, blah, blah. Oh, and credit card payments. And it looks like it spans from July 31st all the way to September. September 31st doesn't exist, so September 30th. All right, and it looks like we have a depreciation and amortization schedule as well for some of these pieces of furniture and cat care items. So, okay, now that we know what we're kind of looking for, we can go back to reading the case and see if we can fill this out as we read the case. That way we don't have to read the case multiple times in order to fill out all these boxes. So let's go to the top. All right. In July 2025, Blue and Bell and their humans prepared for a cross-country move. Their favorite human had been admitted to Harvard Business School, and the family would need to relocate 2,000 miles across the country from Houston, Texas to Boston, Massachusetts. They began the move with a budget of $5,000 in cash. I feel like that is going to be important, so let's highlight that. They also opened a new credit card to pay for all the expenses, hoping to redeem a bonus. So that must be the bonus that the assignment questions was asking about. The terms of the credit card were to spend $5,000 within 3 months to get a $1,000 bonus. So, $1,000 bonus. Let's highlight that. All credit card expenses would be paid in full each month, so interest can be ignored. Awesome. The challenge was to stretch this budget to cover a wide variety of expenses, including the cost to ship their belongings, the cost to fly 2 humans and 2 cats, and the cost to purchase small space storage solutions. Okay. Now we get into the first section, planning the move. In early July, the family booked 2 adult tickets and 2 cat tickets on United Airlines for $688.96. All right. 2 days later, the family secured moving services through U-Haul's U-Box program. They prepaid $668.39, so that seems pretty relevant, for mover help on the Boston side, scheduled for the same day they would land in Boston. The remainder of the quote, $1,570.95, would be paid a few days before the shipping containers were scheduled to move to Boston. So it's going to be paid before. This amount was for the remainder of the service, which is about $70 for local box delivery, charged when the boxes were delivered, and about $1,500 for the shipping containers, charged 3 days before the boxes began transit to Boston. The first month's U-Box storage fee, valued about $60 per box, was waived since they were first-time customers. Nice. So that means we don't really have to take that into account. That's just extra information. Assume all prices are inclusive of sales tags. Amazing. That makes our life easier. And they also bought $200 worth of packing materials, such as boxes, tape, bubble wrap, paper, shrink wrap, and desiccant. Desiccant is very important because in the South, it is very humid and you don't want your electronics to be damaged by the humidity. All right, so we have a good smattering of numbers here. And if you remember, we have the $5,000 and the $1,000 up there. So let's go ahead and fill in the balance sheet. All right, so let's start with the first transaction, budget. So we know that the budget is $5,000 of cash, so we'll stick that there first. $5,000 of cash, and since this is what they're budgeting and this is what they're willing to pay for the move, we can add it to paid in capital. And you'll see here we have a checking row. This way we can see that all of our assets and liabilities plus equity are all zeroed out. So we know that we've debited and credited correctly. The next line item is that they booked the flights. So let's see, how much were the flights? They were $688.96. And they most likely paid it with credit card because they're trying to get those points, and they prepaid it. So credit card is considered a loan from the bank. So we're going to put it in bank debt. So 688.96. So bank debt goes up or is credited, and tickets are usually booked ahead of time. So this would be a prepaid expense. And we see in this column it is zeroed out again. We can deal with these columns later. Okay, reserved U-Haul boxes. Let's see, how much did that cost? They prepaid $668.39 for mover help on the Boston side. So it is prepaid. And then the remainder of the quote of this $1,570 would be paid a few days before the shipping containers moved to Boston. So it's just on the quote. So it wasn't charged yet. No service had been rendered yet. So we don't have to account for this quite yet. I think we should account for it when it is charged. So let's first deal with the $668.39. So this was also likely paid by credit card, and it is a prepaid expense. Great, so all of that zeroes out. All right, next is packaging material. So the case said they spent $200 on that. So $200, the credit card, and then, so the bucket that makes the most sense is probably PP&E. Let's see, U-Haul U-Box delivery. So it says here that the $69.95 was charged when the boxes were delivered. So that means it wasn't a prepaid expense. It was charged when they were delivered. So we paid and got the service at the same time. So it's not a prepaid expense. It's just a normal expense. And it was also paid by credit card. And then the $1,501 were charged 3 days before the boxes began transit. So this is also prepaid because we paid it before the boxes moved to Boston. So let's put that here. That's the last U-Box or U-Haul payment, also paid with credit card because we're trying to get that $1,000. All right, and it's a prepaid expense for now. Great, and now we're at the end of the month, so we have to pay this credit card payment, which is paid with cash, and it is the sum of all the bank debt that we have right here. So this would equal, and then times -1, or a negative number because cash is being credited here. Great. So we see the credit card payment equals the bank debt, and then we will zero out the bank debt because we paid it. There we go. So at the end of the month, there is no bank debt, so we do not have to pay interest on it. Great. Everything looks good. Everything is balanced on this side. Let's see. The day before travel. Okay, I guess we have to keep on reading now. Oh, okay. Now we're going to talk about insurance. So one decision the family wrestled with was whether to purchase U-Haul's moving insurance. The insurance would have covered the current value, not the replacement value of their possessions. Given the value of Blue and Belle's favorite items, the couch, the mattress, the bed frame, the litter robot, and the kibble dispenser, calculate how much their assets are worth now in 2025 and advise if it would be worth it to get insurance. Okay, so now we have all the assets here. The litter robot, retail value at $700, bought in 2023, and a 5-year useful life. So I think the reason why the litter robot and the kibble dispenser each have 5-year useful lives is because they are electronics, and usually electronics are depreciated across 5 years because the technology progresses so quickly that after 5 years, there would have been so many revisions and so many models that the model from 5 years ago would be basically rendered obsolete. This is the same reason why you probably wouldn't purchase a MacBook that was released 5 years ago, because the one that was released, last month is way better than the one 5 years ago. So we would essentially say the one 5 years ago has zero value. So that's why I chose a 5-year useful life for the electronics here. So that includes the kibble dispenser, a retail value at $120, 5-year useful life. The mattress, retail value $400, bought in 2023. I guess it's also useful to note that the kibble dispenser was also bought in 2023. And the mattress also has a 5-year useful life. This is just taken from the internet, how often you should replace your mattress. The bed frame, retail value at about $1,700, and I gave it a 10-year useful life because the build quality is really good and I don't expect to have to replace that. And the couch, the retail value at $4,500, bought in 2022, a 10-year useful life because I expect this expensive couch to be able to last that long. So if you remember the spreadsheet, there is a portion that is asking us to calculate the depreciation and the book value of these assets. So let's go ahead and do that at the bottom. So the mattress was $400. Let's see, the bed frame was $1,699. The couch was $4,500. The litter robot was $700. And the kibble dispenser was $120. All right, and then useful life, we said the electronics were at 5 years, and the mattress was also at 5 years. And then bed frame and the couch were at 10 years. So in order to find the annual depreciation, we would divide the original cost by the useful life. So that's how much it would depreciate every single year. And we just drag and drop. Great. And then the year purchased. The mattress, let's see, it was 2023. Actually, I think they were all 2023 except for the couch. So let's do that. Okay, and accumulated depreciation. So we want to see how much it's depreciated since we've bought it. So right now it's 2025. So we do 2025 minus the year that we purchased it multiplied by the annual depreciation amount. Now, and speak of the kibble dispenser, there it goes. And then to determine the book value, we would subtract the depreciation from the original cost. And here, so we have it. The book value of all of Blue and Belle's favorite things is about $5,200, depreciated down from about $7,400. All right, let's move on. So on the move, late July, U-Haul charged the flat rate of $69.95 for their box delivery. Okay, and then they paid the $1,501 for the boxes to be picked up and shipped to Boston. The actual move took place the first week of August. Okay, they woke up early, took the flight, hopped on a Lyft, which cost about $30, and went to their new home. A few hours later, the movers came and unloaded all the stuff. The family tipped the Boston movers $60 in cash to thank them for the speedy and professional job. All right, let's go back to the balance sheet. So now we are in August. So the day before the travel day, U-boxes would have already moved, so that means prepaid expenses would be credited the same amount that we paid. Let's see. So it becomes an expense at this point. Great. And then the flights. So they take their flight, so it is coming out of prepaid expenses. So The flights are here, and then it's moving over here into expenses. The Uber or the Lyft, so they paid $30, probably with credit card, and it was not a prepaid expense because they actually took it. So it would be over here as an expense. And then the movers came. So remember back when they prepaid the movers when they booked the U-Haul, it was a prepaid expense. So now that the movers have actually come and done the work, we take it out of prepaid expense. So again, prepaid expenses is credited and it becomes a expense. And then the tip. So there was a really important point that the tip was in cash. So we would credit cash over here, and then it would become an expense over here. Okay, now we're at nightstands. So that's pretty random. So let's keep reading. Settling in. Unfortunately, the nightstands they brought from Houston did not fit in their Boston apartment, which that's a bummer. So they sold them for $110. Assume the book value of the nightstands was also $110. Great, so that makes the accounting easy. They also spent $2,000 on storage solutions from IKEA, Amazon, and Target to furnish their Boston apartment. Okay, so they spent that money on stuff. Great, so we're at the end of the case. Let's see if we can fill out the rest. Nightstands. So they got $100 or $110 of cash. So cash is being debited, and their PP&E, they said just assume that it was the same amount. So we will credit PP&E the same amount to have it all balance out. Okay, IKEA, Amazon, and Target haul. So paid for that with credit card. So it's $2,000 there. And then PP&E goes up by the same amount. And now it is the end of the month, time for the credit card payment. So let's figure out how much that is. So that equals the sum of all this, but negative. Great. And then the credit card payment would also be over here. So the cash was credited and the bank debt was debited to zero out the bank debt. Ooh, and we see that might have overspent on the cash. So that means we spent all $5,000 on the credit card. So they are eligible for that $1,000 bonus right here. So the bonus comes into the bank account as cash. So we got $1,000 cash, and because they paid us $1,000 of cash, it's like earning revenue. So we put it over here. Okay, let me figure out what is wrong with my sheet. Okay, there we go. We were supposed to bring that all the way down. So everything is zeroed out, everything is balanced, and we can see that after the $1,000 bonus, we are cash positive almost $900. So amazing. Now let's go back to the assignment questions. And in this portion, we'll do it like it's actually a case class. Should they get U-Haul insurance?
Well, considering that it's to cover my favorite things to sleep on, I think that they should get the insurance. Because if they do get damaged or lost, what are we going to sleep on?
You make a fair point. Just looking at the numbers, it does make sense. And the insurance is going to cost like $200 for each shipping container. But we also hear our humans talking with customer support for like a ton of companies all the time. It's not like if we just pay the premium and then something goes wrong, we'll get easy money.
True, true. They spend hours and hours on the phone calling customer support all the time for a bunch of problems. And from what I've heard, insurance is the worst.
Yeah, I agree. I think we should also factor in the value of their time when it comes to whether or not the insurance is worth it.
Yeah, so two boxes, 200 means 400, and probably like 40 hours of wasted time filing a claim, waiting for insurance to do stuff, and then we will only get 67% of the replacement cost. So we would still have to fork over an additional $2,500 on top of the insurance premium. I feel like it's not worth.
Yeah, definitely not worth the time and money.
So they should not buy the insurance. Plus, they did such a good job packing and waterproofing all their boxes. The $200 they spent on packing materials is basically like insurance against whatever could happen.
I agree. Okay, let's move on to the next question. Did we get the $1,000 from the credit card bonus? I'm pretty sure we did.
Yeah, extra money for treats.
Yeah, but the treats aren't in the balance sheet, even though treats are an asset.
You're right. So basically, assets went up and the cash balance was debited. And to balance the T account, revenues were credited.
And the timing was really clutch too, because after they bought us a new scratching post and all their IKEA stuff that we helped build, they were a little bit over budget. But the bonus came, and now we're positive.
Noise!
Okay, moving on to the next question. What are the alternative ways to make the move?
Right. So I know they were thinking of renting a U-Haul moving truck and driving up to Boston, but they ended up not choosing to do that.
Thank goodness, because I hate car rides.
Yeah, I think that's one of the reasons. It was going to take 4 whole days of driving, and it would be kind of hard for us to go to the bathroom and stuff.
Yeah, and on top of that, the cost of renting the truck as well as finding places to stay each night would add up very quickly.
Mm-hmm. And let's not forget about pet fees.
So, to summarize, it might have been cheaper, but only marginally depending on the price of accommodations. And it would have been very uncomfortable, higher risk and effort because of the driving, and it would take 4 days rather than 4 hours. I'm glad we did what we did.
Yeah, 100%. And I guess they could have hired a company to do all of the packing, shipping, and unpacking. But I think that was like $11,000 plus flights and everything. So definitely not worth
I fully agree. Great discussion, Blue. I think it's time for a nap now.
a show. We deserve it.
And that does it. I hope this was insightful and shows a useful application of accounting. I also want to point out that girl math kind of works in accounting. Because of the $1,000 bonus from the credit card, it's basically like coming in under budget for the move because you see, my cash balance is still positive. And two, the concept of if we already paid for it, it's free is basically true. When you have a prepaid expense and you receive the good or service the expense was for, you just credit the prepaid expenses and debit the expenses, and there's no cash flow at the point the good or service was delivered or satisfied. And so, no cash flow means it's basically free. LOL. Okay, jokes aside, all the credit goes to my amazing professor and amazing classmates who taught me accounting. If you found this useful, amusing, nostalgic, confusing, or found errors, please leave your comments and questions in the comments section below. Subscribe to let me know you enjoyed this glimpse of how the case method is used to teach accounting, and I'm on to preparing for my next case for class. So until next time, bye guys.